Hello my friends and welcome back. Thank you very much for being with me again today. There's no secret that the US economy and the global economy is not doing very well. Let's put it mildly, because I'm in a good mood. But what to do, what to expect, and how should you prepare for what's to come, because it's getting worse. And it's not just me saying that, but I don't hear anybody saying, hey, things are getting better, we're getting out of this. On the contrary, the articles I'm reading and the videos I'm watching, they say we didn't even scratch the bottom yet. We didn't get there yet. So we're still a long way to go down there. So, down there. So let's read this article that comes from the author of, if you're familiar with the book Rich Dad, Poor Dad. His name is Robert Kiyosaki. And this article comes from Business Insider from October 3rd, 2022. And he says that, quote unquote, everything crash is underway. And he trumpets it is a rare chance to make a fortune. All right, I'm ready. Aren't you? We're both ready then. Let's go. So, Robert Kiyosaki warned an epic market crash is underway and millions of people would lose money. That happens all the time. The Rich Dad, Poor Dad author said the downturn is a chance to buy cheap assets and make a fortune. Kiyosaki touted crypto as a good bet despite questioning Bitcoin's value earlier this year. I've been listening to Mr. Kiyosaki lately. I had like a binge of a few videos, and he's a he's a fan of gold assets and of, if you can, buy oil wells. Invest in energy, food, energy, gold. So, or silver. Robert Kiyosaki has warned a historic market slump is underway and heralded it as a rare opportunity to make life-changing amounts of money. Well, if it's that easy, we'll all be billionaires pretty soon, right? And I'm quoting him. Here it comes. The everything bubble turns into the everything crash, he said in an email to his followers on Saturday. And I'm quoting again, it's going to be the greatest crash ever. More wealth is going to get transferred than ever before in history, end quote. In another email blast on Sunday, the Rich Dad, Poor Dad author trumpeted the buying opportunities he expects to emerge in the coming months. And I'm quoting, it's time for the poor to get rich, he said. Stocks, bonds, mutual funds, ETF, and real estate crashing as predicted. Millions will be wiped out, but thousands of the poor and middle class will become increasingly wealthy. He starts from the premises that you have money to invest, which I think 40% of the whole United States population doesn't have saved $1,000. And I can remember what was the proportion of how many people, if tomorrow have to pay $600 out of their pocket, they don't have it. And it's a big number of people who live from check to check. A big chunk, 60-70% of this kind of people. So he assumes that people have money to invest. Some have, some don't, but a poor person doesn't have anything to invest. So when he talks about poor people making money, I don't think so. And what's middle class? I just made a video with some statistics and numbers, and it's a lower middle class and upper middle class. Which one are you talking about? The lower middle class is people that are not that poor, let's put it this way. And upper middle class are the middle class. And upper middle class is very high, okay, as income. Kiyosaki recalled that he personally capitalized on the collapse of the mid-2000s housing bubble. Where am I here? Okay. And I'm quoting him again. 2008 was great time to get rich. Everything went on sale. If you have money, he said. The sales were so great, I borrowed millions of dollars to grab all the real estate bargains I could. All right, that's a good plan. If you receive you get loans. And as someone said, when inflation is high, loans means cash, because in the future you get a loan. Is not a debt, because you turn it into cash by putting it into properties. The personal finance guru and founder of the Rich Dad company has been bullish on gold, silver, and Bitcoin for several months. He predicted those assets would tumble along with the broader market, but advised investors to take advantage of cheap prices and purchase more of them. True. As he expects them to surge once the Federal Reserve ends its campaign of interest rate hikes. Yes, the gold just jumped to $100 almost per ounce, which was 1,630, and right now is 1,710 or something like that, almost $100 in about 2 days after it dropped in about a week, again 100 and some dollars. So it's big fluctuation over there. So Kiyosaki signed out cryptocurrencies as having the greatest upside of any asset class. However, it's worth noting he dismissed Bitcoin as worthless on his radio show in May. I trade Bitcoin, but I don't think it has any value. I just play the game. Well, as someone said, you make money if you start early. So if you would have bought Bitcoin when it was $6,000, yes. When it got $60-some thousand Bitcoin, yes. You imagine, right? 10 times more almost. It was 60,000, 62 I think it was, if I remember correctly, yes. He also issued some unusual advice in June for people looking to beat inflation, suggesting they stockpile trash bags, toilet paper, and canned goods such as tuna and baked beans to get ahead of price increases. Well, you can't prepare with everything. You know what I mean? The author repeatedly sounded the alarm on a massive bubble in asset price during the past 18 months and predicted it would end with a devastating crash. Well, things are not going too well, and if it keeps going like this with Russia, it's going to go down for some time. You can't, really, no resources, and you need fertilizer for grain. You need grain for animals. You need grain, you need fertilizer for food, right? Where's fertilizer coming from? From fossil fuels, right? It comes from Russia. Russia is, I think, one of the biggest exporters, and Ukraine. So Ukraine used to be, I guess. So yeah, buy assets. That's always been a good thing. And they say, well, regardless of the interest rates that now are considered high, they said, the guys I was listening to and read about, and whatever they said, economists and experts, they said actually they're where they're supposed to be right now. So if you go over there and try to get a loan for a house, is let's say $5 or 6%, it's not, oh my God, it's high. Yeah, it's high compared with the abnormal low that was during the pandemic. So now it's back where they should be. And he says, even if you take it now with the rate of inflation, and I know this for a fact, for the rate of inflation, you would get your money back because the number is going to remain the same as long as you don't have a variable, you don't go and deal with the banks or a variable interest rate. Fixed, you're winning. Why? Because you know the inflation. Remember, I lived through a big inflation, almost as Weimar Republic inflation after the First World War, after the revolution from 1989 in Romania, where prices were going like this from day to day and the income were staying, and I saw how things were changing, and I'm very used to see that. So if you buy something then, if you're an American and you would have gone then in Romania and you go over there and say, okay, I got $100,000 cash, borrowed. You don't have to have it in your pocket or your sock. You know, you show up in Romania, you could buy at least 15 apartments, 3-room apartments. Right after the revolution, even more than that, because it would be like $3,000, $5,000 at the most, $3,000 an apartment, 3 rooms apartment, and not bullshit that you have here in America. Everything is, what the is this? You know what I mean? Brick, concrete, solid, like it used to be. And you had that, you buy about 20 apartments with $100,000. In 10 years, if you just pay taxes for that, which was about $10 a year for one apartment, really, I'm not bullshitting, right now is about 50 for a 4-room apartment in Romania. $50 a year, not a month, a year property tax for an apartment over there. I know, direct experience, believe me. So then it was like $2 or $3 a year or something, or something insignificant. You pay what? Let's say in a year, just to keep those apartments, how much you invest? $1,000, $2,000, $3,000. So let's say you got $100,000 plus $3,000. So $103,000 you invested, and you stayed on it. You sat on it 10 years. You know how much the prices jumped? At least 10 times. You would have been a multi-millionaire right now with all that. All those $100,000 that you paid, the price will jump. How much? Let's say from about $3,000 jump to about $50,000, something like that. It's 10 times one. So you make right there $1 million, boom, in 10 years at least. And would have been a big, and you could still have apartments. So yes, properties always work. So for that $100 that you borrowed and you paid, you know, just to keep it there, or even paid the minimum for those $100,000, you get your money back in 5 years, 7 years, because of the inflation. Because the numbers remain the same. 100,000 with inflation, with interest, remains a little bit. Buck. Yes, exponential a little bit there, right? Oh, it's okay. But the inflation is so high that it how do you call it? Oversteps. It bypasses the how much you pay for that. So yeah, I think that's coming. Buy whatever you need. And abundance, whatever you need, buy now, because tomorrow is going to be more expensive. That's how it was over there, and this is right now, but it's a little bit slower. Go and see how much was milk about a year ago, and see how much the milk is right now. All right, thank you very much for being with me again today. Stay strong, stay smart, look for the truth, and be just.